Hi there, welcome to Kneppy Invest and welcome to October 24, 2024. We have about 50 to 3 minutes left of trading today and pleasantly surprised with the ASX 200. In fact, it's up slightly. However, small caps, tech, and mining or resources have had a bad day. And that's more in line with what I was thinking was going to happen to our market today. So something has lifted the ASX 200. And it's not small caps, not tech, it's not mining. I think it might be financials if I have to have a guess. I'm just guessing at this point in time. Now, the reason I'm a little bit surprised and pleasantly surprised that the ASX 200 is up at the moment is because Wall Street had a pretty big down day. Maybe not big down day. They definitely had a down day. NASDAQ down 1.55%, Dow Jones Industrial down 0.96%. S&P 500 down roughly the same as the Dow Jones. I did have a night shift overnight, so I did follow it, not that closely, but as I did see it tumble, I thought, uh-oh, there goes the Australian market. And I fully expected a down day. So pleasantly surprised that we are not down big. I had a look at my portfolio because I do have quite a few small caps and tech companies, and my portfolio was up as well. I think that has something to do with a few companies like EZZ Life Science. However, okay, so the agenda for today's video, we'll go through the ASX today, looking at the best and worst performing companies, sectors, and also indices. And then we'll have a look at the top 5 stocks of the day. Now, we do see a lot of interesting announcements this time of year. We've just started, maybe not just, but we are in AGM season. So most companies, when they do have an AGM, they also issue a trading update. Trading updates are by far the most important announcement a company can release because it can drive the share price of a company up significantly or down significantly because it changes the expectations of the market. So without doubt, trading updates, profit downgrades, profit upgrades are the most powerful type of announcements. But something else that is quite powerful are Appendix 4Cs, 5Bs, how a company has performed financially in the past quarter. So I aligned Appendix 4Cs and 5Bs with half yearlies and yearlies. I don't think they're quite as important as trading updates because sometimes we don't see quite the share price rising or falling on financial results, but sometimes we do. Anyway, so not only are we in AGM season, we're also in quarterly season, and we're towards the end of October. So 1 week to go, which means we're going to see many Appendix 4Cs and 5Bs released over the next week. And I am quite busy during the last few days of this month, quarterly reporting month. So October, January, April, and July. Now, the top 5 stocks of the day features a few companies that issued trading updates and one company that issued an Appendix 4C, one company that issued their quarterly activities, which is a mining company, and in fact, 3 companies that released trading updates. And I'm pretty sure all 3 companies also had the AGM. Quite a few companies I won't talk about in the top 5 stocks, but I'll have a look at the charts. And I don't think the share price of these companies have moved significantly enough for me to discuss. Okay, so let's just have a look at, and then if I have any time, I might have a look at or answer some of your questions or respond to some of your comments. Now, let's just have a look at trading economics just to see if there's been any interesting news flow in this area. So Japan manufacturing PMI drops to 7-month low. Now, I did make fun yesterday because I think there was a few stories about hitting 3-month highs and 2.5-month highs. So really what I'm looking for here is multi-year lows. Japan services PMI falls to 32-month low. That's the sort of thing I'm looking for. Even a 7-month low, I don't really care about that. Malaysia inflation rate lowest in 5 months. Yeah. China stocks fall on market caution. Oil rises, falls yesterday, rises the day before, rises today because of Middle East. And Australia private sector activity rises to 2-month high. 2-month high. Nothing to get excited about that. In fact, it's the Judo Bank Australia Composite PMI output. 49.8, up from 49.6. Okay, and just looking at some of the commodities, green, not sure why resources are down today. Lots of green here, gold, silver, copper up, coal up, iron ore down. Maybe that's why. Okay, and I won't go through capital brief. I did that just before I started recording, just to save a little bit of time. Anyway, so let's get to the ASX today, just to see what sectors, indices, and companies have performed or not performed today. Now, let's have a look at the sectors. This is going to be interesting. Financials, yes. I had a feeling financials. I didn't think of healthcare, but definitely if financials do really well, we're talking about 4 of the biggest 6 or 7 companies on the ASX. If they do well, CSL, one of the biggest companies on the ASX, if they do well, we can see why the XJOs had a good day today, but tech, small caps, and mining have not. And down the bottom there, IT, I'm pretty sure that's because of WiseTech. WiseTech is again down about 6% last time I looked, and materials, discretionary also down. Have a look at the ASX 20, up 0.35%. So that's doing even better than the XJO. And I am assuming, again, this is because of the banks. Not sure why the banks are rallying. I forgot to guess. 8 down, 1 flat, 11 rising. I wouldn't have got this right anyway because one company is flat. And at the best, at the top of the ASX 20 performance, whatever you want to call it, REA Group. But then we have ANZ, CSL, Commonwealth Bank, NAB, Woolworths, Macquarie. So some of the biggest companies in the ASX 20 are there. In fact, 2 of the 3 biggest companies have had a pretty good day today, and that is why XJO is up. On the flip side, I did see one company down, WiseTech, down 5.44%. So it has rallied over $100. $100 is a key level. Now, for some reason, I'm not sure why WiseTech has dropped today. I did see Capital Brief mention there was a downgrade from a broker, but they downgraded it to like $110. So it's $100 now, so I don't know. Fortescue, down. Brambles did issue or have their AGM today, so not positive. We'll have a look at the chart for Brambles. And there's Rio Tinto and also BHP. So iron ore is one of the reasons why mining is down today. Okay, so let's get to the best and worst performing companies on the ASX. See if there's any surprising companies here. Usually there is 1 or 2. Okay, top gainers by percentage change. I only have a look at a few here. Not DGR, low turnover. Ovanti has been in the news lately. I'm pretty sure this is the company where the Zip America or US CFO is now in charge. And for some reason, the market liked it. Did they release another announcement today? No. New CEO at major conference to expedite US market entry. Chart-wise for Avanti, I don't know here. Let's have a look. Okay, so a couple of down days. Yesterday was flat, sort of signaling it had found a bit of a floor after a 2-day drop. Massive volume coming in the last 6 trading days. This could be a plaything for the day traders because that sort of announcement in regards to the new CEO wouldn't really trigger me to take a position in Avanti. But interesting looking chart for this company in terms of it was in a horrible downtrend and maybe the downtrend has come to an end. But I have no interest in Avanti. I have to be honest with you. What else is here? Nothing much. Most of these companies are up on fairly low turnover. There's one company up 27% on $111 traded. Globe Metals and Mining. A company called Expon Technologies is up 30%. I'm pretty sure that company did release an Appendix 4C today. Not operating cash flow positive. And to be honest with you, going from 1 cent to 1.3 cents, it's not much. So I won't talk about Expon. I had no inclinations to even discuss this company because the company is still not operating cash flow positive, not free cash flow positive, and even the receipt's not really growing. So let's move on. Anything else here? Oh, yes, there we go. A company called Chrysos Corporation, a company I've owned in the past. They did release their Appendix 4C. I liked it. I liked it a lot. I'm not surprised the share price is up 17%. Yes, 17%. And that company has come in at number 2. Maybe Chrysos Corporation belongs to be in the number 1 position, the top stock of the day. But that belongs to another company. I'm hoping that company is in the top gainers by market cap. So let's have a look here. So there's Chrysos Corporation. And just behind Chrysos, we have Adhairs. Funny enough, Adhairs has a much lower market cap than Chrysos. I didn't realize that. So Adhairs had their AGM, released a trading update, share price up 12.72%. And that company is the stock of the day. Other companies rising here, email payments. Might have a look at the chart for email because the chart looks ugly. I think this is just a bit of a bounce because we have seen a lot of selling. DGL Group up 11.5%. So I do own DGL, but I don't remember the company releasing anything. I think the floor is in. I'm going to call it right now. The floor is in for DGL, and we might have a look at the chart for that one as well, if I have time. So good day for DGL. Biome did release Appendix 4C. Didn't really get close to the top 5 stocks of the day, to be honest. Same with EZZ Life Sciences. I might briefly discuss EZZ because I do own that company, don't own Biome, but and the reason I want to discuss EZZ because I do know a little bit better, and I was a little bit concerned that the share price would take a tumble today because this particular quarter, the September quarter, tends to be their weakness. There is a bit of seasonality, and I thought if the share price tumbles today, that would be the reason. I think maybe the reason share price has dropped the last few days is because the market was selling ahead of the release of their Appendix 4C, and we also saw some interesting trading in that company as well. And Pioneer Credit. Go Pioneer Credit. Pretty nice looking chart for Pioneer Credit. In fact, we'll have a look at the chart of that company in the chart portion of the video. Okay, so let's go to the top losers today. I hope a few of the companies in my top 5 stocks are in this list. Carno. I have a feeling Carno is delisting. I have a feeling... Not today. Yeah, proposed voluntary delisting from ASX. They announced that 3 days ago. I didn't even mention that. And the share price has taken a bit of a tumble since then. In fact, the share price has dropped from 31 cents to 15 cents. It's halved. Again, further proof that delisting does cause damage to the valuation of the company. Here's more proof. Hard no. Delisting, I should say no to that. Other than that, Toys R Us. Who knew there was a company called Toys R Us listed on the ASX? I'm pretty sure it's New Zealand. I have a feeling it's New Zealand. I could be completely wrong. Anything else here of note? There's nothing here. Maggie Beer? No. Lotus Resources. I should have a look at Lotus because there's pretty big turnover there. What's happened with Lotus Resources? Announcements. Update proposed issue of the securities. No. Oh, they did a capital raising. Don't care about capital raising, so let's move on. And let's have a look at the top losers by market cap. And we have WiseTech, Reece. They did have their AGM, I think, but definitely they released a negative trading update. Share price down almost 7%. That is in my top 5 stocks today. Cettire isn't. That's just noise, I think. WA1 Resources, I don't know. Hum Group, no. And in silver, down 8%. Ooh, interesting. And Articore. Did they had their AGM, was it? I thought it was yesterday, not today. I could be wrong. Oh, it was today. Articore did not make it in my top 5, yet the share price is down 9.52%. I'm pretty sure this is the old red bubble. I could be wrong. I don't know, but the chart, I don't think the chart looks enticing at all. No interest in this chart. Share price down 9% on the AGM. There's Worker. Interesting, down 7.7%. Okay, so there was a few companies, or 2 companies that are in my top 5 stocks that I have not seen among any of the top performers or top losers. Okay, so let's get to the honorable mentions. Few companies, actually, no, what I'll do, the honorable mentions, I'll just have a look at the chart just to see if we have some interesting charts. So let's actually have a look at the top 5 stocks of the day, starting right now. And coming in number 5, we have Super Retail Group. Share price down 5%. They had their AGM and a trading update. So when you see share price down 5% on the back of trading update, there's a bit of negativity there. But it's negative. It's not positive. It's definitely negative. Now, I'd like to see, because I've noticed share price is near the low of the day. I did have a quick look at this trading update. Nothing positive. Now, to be honest with you, I just looked at the numbers, not the commentary. I just looked at the numbers. And the main thing I looked at is like-for-like sales. It's flat, up slightly. You want to see like-for-like sales definitely positive. If you see it negative, ooh. Now, over the last year, we have seen quite a few retail companies report like-for-like sales negative growth. So at least Super Retail has not seen any negative growth here. So Supercheap Auto up 2%, Rebel 1%, BCF 3%, and Macpac 4%. And then total sales, because like-for-like is assuming you don't have any more stores. So obviously they do have more stores in the past year, or they've opened in the past year. So obviously the market doesn't like this. Thought it was a little bit weak, I'm assuming. Haven't gone through the commentary to see anything. There we are. They also plan to open 25 new stores in financial year 25. The outlook for the consumer remains uncertain, given ongoing cost of living pressure on household budgets. The group's customer value proposition, the strength of the 4 core brands, and the size of our customer loyalty club membership base means Super Retail Group remains well positioned. Blah blah blah. As always, the group's first result will be highly dependent on trading in the peak Christmas period. So let's have a look at the chart for Super Retail. I'm pretty sure this actually looked pretty good. Maybe today is the end of the pretty good looking chart, and not necessarily so. Share price up and down in waves, but if you do look at this, probably if you look at the weekly chart, it's in an uptrend. And this could be the sort of maybe a buy the dip situation. Share price has dropped significantly in the last 2 weeks. In fact, last week it dropped 4.9%, and this week it's dropped 7.33%. So maybe a buy the dip situation. Not sure about the valuation. I'm assuming the valuation might be a little bit high. Not too stretched. P ratio of 17. Dividend yield of 6.6%. I don't mind this company. Yeah, I don't know. Share price has dropped a lot, so I wouldn't be surprised to see a little bit of buying coming in, because I would assume this company is now oversold. So if you like this company, if you want to own this company for long term, maybe now is the time to take a position. If not, you can be patient. All right, so Super Retail coming in number 5. Coming in number 4, I actually expected this company to be among the top losers. Newmont Corporation. It's down 6%. How is that not in the top losers by market cap? Because there's WiseTech down 5.99%. Unless this is 20 minutes delayed, by the way. So no, it's still not there. I'm not sure. So Newmont did release their quarterly report today. Third quarter results. This was a bit of a disappointment. In fact, Capital Brief, did not have a look at it, but Capital Brief mentioned, if I can find it here, Newmont shares tumble after sizable miss to third quarter forecast. So that's pretty big, sizable miss. So they did not perform as well as the market expected. Leonardo AI begins a second life under Canva. Interesting. So whenever a company misses expectations, the shares should fall naturally enough. And that's exactly what Newmont has done. So haven't even had a look at their results. And all I needed was to see the market reaction to know that it was a bit of a miss. Now, what was interesting about Newmont is because they released a positive trading update or results last quarter. So things can turn quickly and quite suddenly for mining companies. So Newmont, and the reason Newmont is listed is because Newcrest, they bought out Newcrest, I think. It was called Newcrest, wasn't it? Yeah. So I was going to look at the New York Stock Exchange. Pretty nice chart, Newmont. I am assuming the share price is going to tumble. But let's go to the ASX chart. And that looks pretty good. So it's a pretty good looking chart. Again, the share price has taken a bit of a dip, and I can't remember when they released. So it would have been maybe 11th of July, sometime around there. And the share price has really, it's a beautiful looking chart, but most gold companies should look really good. It's just these situations when a company might release their quarterly results and the market might be a little bit disappointed, and that's when you might see the share price dip. Or there could be various other reasons why the share price might dip in one day. But if gold keeps going up, Newmont share price should keep on going up. So this could be a buy the dip situation. The other thing to pay attention to is we have seen a little bit of buying today coming in. So Newmont share price has risen during the day. Let's have a look at the 1 minute chart. Just see where the low was reached. The low was actually reached not in open or near open. It was reached 1 hour and 42 minutes after open. And then we saw the share price starting to go up. So that's Newmont coming in at number 4, Reece. Not surprising, the share price might tumble for Reece, down 7%. I have had a look at Reece over the past few years, and every single time I look at it, I go, just too richly valued for my liking. And what I mean by that is if you just have a look at ComSec, their summary section, the PE ratio is 39, almost 40. Yes, almost 40 for a company that's not growing all that quickly. Dividend yield 0.5%. So not even income investors would have an interest in this company. So every single time I had a look at this company, I just thought, it's a little bit too richly valued for me. And also thought that I don't see much growth in the short term, maybe even the medium term for this company. So not surprised to see the company struggle. So they did release their trading update and they had the AGM. Here he goes. First quarter trading update. Now, this company, again, has a P ratio of 40. So to justify that sort of valuation, we need to see some pretty good growth. So I was really intrigued to see if this company experienced any growth because it needs growth because the market is quite short-term looking. You might be told it's not. It looks forward, but it does look forward, but it looks forward in the short term. And when the company or the market sees, I thought there was a table here. For some reason, I thought there was a table. I could be thinking of another company. Anyway, so Reece announces its first quarter sales update. Revenue of 2.232 billion, down 5% on the same period last year, down 4% on a constant currency basis. As we anticipated the full year, the challenging trading environment has continued during the first quarter, driven by ongoing softness in housing activity in both regions. So they're talking about Australia, New Zealand, and US. They have a fairly big US presence. In the United States, sales revenue down 6.5%. They also blamed adverse weather conditions. Anyway, and Peter Wilson, CEO, says the lead indicators continue to be challenging in both regions. While the US has seen its first rate cut, this will take time to work through the system. And don't forget, most Americans are on fixed rates. So if interest rates remain high, there's going to be less people building houses and even moving. Anyway, so that's Reece. And let's have a look at the chart for Reece. I'm pretty sure plumbing. Oh, that's the 1 minute chart. Daily chart for Reece. So it's a really good looking chart, isn't it? Really good looking chart. For some reason, when they released their results in February, share price popped up 18%, and that was near the high. So after the company released their results in February, share price popped up. We haven't seen or did not see the share price move into an uptrend. So that is a negative sign moving forward. And today they did release a negative trading update. Share price has pulled back. And this is after share price pulling back the few weeks previous. So the P ratio could have been as high as 50. If the share price falls below $24, that would be really negative. So that's the price I would be paying attention to if I was trading this, and I am not. There has been a little bit of bounce. Share price almost got to $24 today. So that could be encouraging for holders. The share price has remained strong above $24. But anyway, Reece coming in at number 3 with a negative trading update. Coming in at number 2, Adhairs or Chrysos. I'm going to do Chrysos. Chrysos, Corp, I'm Chrysos Corporation, share price up 15.5%. I have owned this in the past, just trading it. And as soon as I saw the trade going against me, I took my profits. Now, this company is sort of like it's new technology for, what do you call it? Analyzing gold and stuff like that. What do they call that? I was going to say alloying, assaying or something, whatever it's called, assaying, ASSAYN. So new technology. I'm pretty sure it was developed by the CSIRO and then sort of spun out, but this is new technology. But capital heavy. They do have to, spend a lot of money for the equipment or the machinery for the new testing. I know. So they released their Appendix 4C today. Very interested in this Appendix 4C. This is probably the ones I was looking out for the most. Now, the share price of Chrysos had taken a bit of a dip the last week or so. Maybe the market was expecting not a good quarterly results. So I knew that. Even though I'm not holding this company, I'm following it because I do like their technology. So this could be a company that I could own for the longer term. Anyway, so I never look at the commentary first. Sometimes I do. That's a lie. Sometimes I do. So this is their Appendix 4C. Cash flow from operations. So receipts 14.6 million. A nice increase from last quarter. In fact, I should just show you. Itchy ear. C79. I don't have a nice little graph, but I do have the numbers here. Let's have a look at view, just to increase the font size to 200. And what I'll do is I'll just highlight it. There we go. So the receipts, and one of the first things I look at when I look at the history of this, of any company that do release Appendix 4Cs and 5Bs, I just look at the cash receipts history. So cash receipts have increased from 3.8 million up to 14.6 million, and a noticeable increase in receipts in the last 2 quarters from 7 million to 14.6 million. So the company has doubled their receipts. So we are seeing this company gain a bit of traction. And that is intriguing to me. And the other reason it's intriguing is because the share price has pulled back a lot. We'll have a look at the chart in a second. Okay, so receipts up to 14.6 million. But the most important thing here is operating cash flow positive 3.8 million. Now, this company is often operating cash flow positive. Now, I did mention this company is capital heavy. They spend a lot of money on capital expenditure. So Section 2 is quite important. And you can see why. Properly planned equipment, $12.8 million. This is an ongoing thing for this company. So even though they are operating cash flow positive 3.8 million, they are actually free cash flow negative by $9.1 million. So I do prefer or would prefer this company to be more free cash flow positive or a little bit more positive when it comes to free cash flow. So they haven't quite got there just yet, but the market has liked it. Share price up 15%. The other thing to note here is how much cash they have. So cash dropped from 61 million to 47 million. So if they continue this cash burn, and maybe they won't, maybe the cash burn will significantly decrease the next few quarters. Did I say that right? Significantly decrease the next few quarters. If they don't, if the cash burn remains fairly high, they'll eventually will have to do a capital raising or increase their debt. Talking about debt, do they have debt? Section 7. No debt. In fact, they have $95 million of unused financing facilities. They have not needed to use those just yet. That's a good thing. I did not have a look at the commentary. So it seems like 2 units deployed during the quarter. First unit at the Barrick Newmont NGM complex, marking Chrysos' first USA-based installation. So that's a good step in the right direction for this company. And they also have a total of 31 units now deployed. So they are growing. They are growing. So let's have a look at the chart for Chrysos. So the share price up 15%. Now, I just mentioned earlier that the share price had taken a bit of a dip the last week or so. So the chart is not going to, this will not be a breakout. I almost can guarantee you that. So let's have a look at the chart for Chrysos. And the whole thing, what I'm doing here is I'm looking for breakouts of positive financial news. So ideally for Chrysos, the share price today would be at least a 3-month high, preferably 6-month, 1-year high, but definitely not that. In fact, the last time the share price was at these levels, $5.40, was 4 trading days ago. So we're talking about 4-day high. Not interested. But the main thing is there was a downtrend. The downtrend was broken back in August, but the share price is still sort of drifting lower. And I'll also talk about my trading of this company. So I took a position in this company when the share price moved into an uptrend. You can just see the share price moving into an uptrend in early 2023. I held it all through this period. At one point, I nearly took profits. I nearly took profits in July. Very glad I didn't. Held it all the way to the top. And then when we started to see this weakness, you can see a fair few down days. Share price went from about $8.50 down to $6. I took profits somewhere in there because I thought share price is starting to look a little bit weak. But I'm still following this company because if I do see some good signs moving forward, I will take a position in Chrysos, maybe a trading position. So that's Chrysos Corporation coming in number 2. Pretty good day for this company. Although, even though it's a good day, share price is back up to the levels it was 4 days ago. Now on to Adhairs. Share price up 12.7%, which is a pretty good day. So again, Adhairs had their AGM and also issued a trading update. Fun enough, seems like the share price had rallied for this company a week ago, and they actually had to do or respond to a price query. Okay, they didn't have an AGM. When is their AGM? Maybe they did have the AGM and they just haven't mentioned it yet. They have the AGM 25th of October. That's tomorrow. So interesting enough, they have a trading update. And maybe the management just couldn't contain their excitement and release this trading update when they had their AGM, which is tomorrow. They just had to release it today. They just had to because it was positive. Share price up 12.7%. It's positive. Yeah, we know it's positive. So let's have a look. And it's positive, yeah. Adairs, in fact, between weeks 9 and 16, Adairs was up, not the other two divisions, 16.1%. Weeks 1 to 16, 8.6%. Weeks 1 to 8, 0.2. So we have seen a little bit of acceleration in this company's sales in the last 7 or 8 weeks, 16.1%. Now, Focus on Furniture down, but Mocha up. Not sure who Focus on Furniture is. Obviously, furniture. Not sure Mocha. But that's a really nice growth in Adairs in the last 8 weeks. That's what the market is looking at. I did not have a look at any commentary trying to explain what's happening. In fact, do they have any commentary? No. No commentary. Capital expenditure, talking about expected capital expenditure. Okay, so let's have a look at the chart for Adairs. Is this chart looking interesting? This is probably the most promising one, if I had to guess. I don't know. I haven't seen this chart for a little bit. Oh, is this one's an interesting one. Okay, so share price took off last week. 2 consecutive days where share price just went on a run, up 9% on both days. Loose lips, potentially. And maybe someone in the know saw there was going to be a trading update or knew the trading update for Adairs was quite positive. Maybe they called their parents or friends and family and said, hey, we're doing pretty good. You should buy some shares. And they bought shares en masse 1 week ago. I'm not saying that's happened, but wouldn't be surprising if that did happen. And today, share price up 12%. Now, share price is at the highs we saw not that long ago. And when I say not that long ago, we're talking about March. So is 7 months ago not that long ago? I think it is. Based or compared to the age of the universe, 7 months ago is just a pittance. So this could be a breakout. I'm a little bit nervous though. Although, yeah, I don't know. Market cap, nice dividend yield, P ratio is not that high. That growth in sales in the last 8 weeks is impressive though. I don't know. This is going to be an interesting one. I'm going to put this onto my watch list. I don't know. This could, I don't know. Yeah, I'm just not there. I'd be all in, maybe not all in, but if the share price didn't run up back in February, March, if the share price didn't run up last week, and today we saw breakout at around about $2.25, I would be excited, way more excited. Okay, so let's have a look at some charts. Some companies that did not make it into the top 5 stocks of the day, and then we'll have a look at some of your comments. So let's start off with, and what I'm looking for here is any signs of breakouts. So we go through this fairly quickly because I have 10 companies lined up. So Insignia Financial, pretty sure they had the AGM or something. The share price, the chart, really intriguing. So fair bit of volatility and not a good reaction from the market today. This one actually does look interesting, but I don't like that volatility. Share price started to run, then fell in August, so their results, and then for some reason the sentiment just shifted like that and went on another run. And now negative AGM and share price has dropped 2.8%. It's not that much, but it's still a drop. IAG Insurance. This should look pretty good. Yep. No complaints about this chart. Would I buy this? No. TLX Pharmaceuticals had some good news when it comes to the FDA approving something. I forget what now. So accepts NDA and grants priority review for Pixar. So it wasn't FDA approval for one of the products. The share price would be up a lot more than that. But share price is up. And I was hoping the share price would be at an all-time high, but not yet, or not quite. 4 days ago it was, but the chart still looks pretty good. No complaints about that chart, particularly for a shareholder like me, who's been in since 666, unfortunate price. So it's 2 years ago. So it's TLX Pharmacy. And funny enough, when I bought TLX back then, I thought it was expensive. And I was like, oh, geez, this is expensive, a fair bit of risk, but I just like this rapid revenue growth. And the very fact that share price is now up 300% or 400%, 200%, it's tripled. Just shows you that sometimes valuation, particularly for a company that is growing really quickly, doesn't mean as much. It's not as important for a company or as compared to a company that is not growing. Valuation for a company that's not growing, that's really important. Okay. Brambles, this chart did look good. A nice little breakout when they released their results in August. Really good looking chart. This definitely could have been a buy, but then the share price has pulled back on a disappointing update from the company. But the chart still looks okay. Don't think the uptrend has come to an end just yet, but this could be the first chinks in the armor for Brambles. Northern Star. There was mention the share price had dropped because results were not that good. But then I had a look at the share price drop and it was like 0.11%. Still a pretty good looking chart. And I do notice there was a fair bit of buying today. So a nice little green candlestick, which means share price low was near the start of the day, share price high near the end of the day. So we have seen some buying. And you can't complain about this particular chart. The only thing you can complain about is if you sold on open this morning. Fortescue. Now, weakness throughout the iron ore sector. Fortescue also released their quarterly results, and share price is down. And I think maybe their little rally in iron ore has come to an end. Would I buy this? No. The only way I would think about buying this is for valuation reasons, but is it good value at these prices? I have no idea. Fortescue EML. Yeah, this is a weak looking chart. And even though share price is up almost 10%, it doesn't really do anything at all. Share price is back up to where it was a week ago. Yeah, this is just one of those bounces you see when the share price has fallen a lot, maybe a little bit oversold, that sort of thing. So nothing too exciting for email payments. But I think there could be an argument the market is overreacting and the share price is falling to levels where it could be argued that there's pretty good value in this company. DGL. This is the one where I want a breakout. This is the one where I want really good news from the company because I've do hold shares in this company, and I just think there's good value. I think there's definitely a proposition, an argument that is really good value in this company. And I'm starting to like this chart. There was a really good day 2 weeks ago, 11th of October. Yep, 2 weeks ago, up 8%. Share price pulled back. And now another good day. And now the share price has gone beyond the highs we saw 2 weeks ago. So this is a good sign moving forward for DGL. The other interesting thing about today is really good volume as well. So good volume coming in for DGL. And finally, Pioneer Credit. I really have to thank someone, a viewer of this channel, who just said, hey, have a look at Pioneer Credit. So I had a look and I went, oh, valuation-wise, this company looks interesting, particularly if they reach their goals whenever. Is it 5 years away or next year, whatever? If they reach their goals, this company could be considered cheap. So I bought some at 47.5 cents, share price up 4% today, and looks pretty good. Pretty good looking chart for Pioneer Credit. Okay, so let's have a look at some of your comments. Stu Percy says, with Playside Studios, oh, by the way, let's have a look at Playside Studios. How has it done today? I do like to see how share prices of companies perform after a really good day or bad day. Now, if you don't see the share price rally after a bad day, that could be a bad sign. So Playside Studios down 2.1%. Who else had a bad day yesterday? So Adacel. Let's have a look at Adacel. Up a little bit, not much. And Coden, remember Coden had started a really bad day. Wouldn't be surprised. No, I was going to say, wouldn't be surprised if it's up. And 29 metals down again. Okay, so Playside Studios. So down again today. And Stu Percy makes a really good point here. So big drop in EBITDA. So revenue, it's virtually flat, we'll say, but big drop in EBITDA, which means like margins have dropped. And one of the reasons why margins might have dropped is because they're spending a little bit more money on creating all these new games. So they're spending for future growth. I'm pretty sure that's what Stu Percy is talking about here. So yeah, I'm pretty sure that's what he's talking about here. Those numbers could turn around very quick. Do you disagree? Absolutely not. The problem though, is the market, in my opinion, is fairly short looking. Doesn't look forward all that much. So we are told the market is forward looking, but I don't think it looks forward all that much. Maybe 3 months, 6 months, that's it. So when the market does see a little bit of weakness in results, and it's also backward looking, to be honest with you, they just completely ignore the money the company is spending for future growth. And so that will lead to share price dropping. So I will not sell my Playside Studios shares because I do think the market is overreacting. So actually more likely to buy. Now, does this mean we're going to see significant growth in revenue over the next few years? Not necessarily so, because the company's success, financial success, will rely on how popular their games become. Now, they could hit pay dirt, and one of the games could be the most popular game in the world, and that would be company making. But I do not disagree. So the market, again, is just looking at the numbers, and again, they don't have much of a focus for the future. That's why the share price has sold off. Okay, what I'm going to do is I can't really discuss all your questions. So I'm going to have to be picky here. So I'm sorry, Stocks Under the Hood, talking about Austin Engineering. Sorry, Roger, talking about Lumina. I'll get back to these maybe. Lumina price, high since 2018. Oh, Nine Slide Glide made a I think, a very astute point here. He mentioned that there is a fairly large holder in Adacel, Thorney Holdings, 34% stake, and maybe they want a more stable valuation. But would they be happy with the share price dropping 36% in one day? I don't think they would be. I just don't think. Why would Thorney be happy with that sort of performance? I just don't know. I just don't understand why. It just boggles my mind. We have seen it time and time again. A company will say we're delisting because the company is undervalued. We're not appreciated by the market, and then the share price just takes a massive tumble. And yeah, I don't think the companies will be rated more highly or valued more highly after they become private. I just don't think that happens. Animal Spirit, what do you think? Ales Clinuvel earnings and revenue are growing, but the price is stagnant. I think it's just negative sentiment. I think that's it. The reason I say it's just negative sentiment is whenever the company releases something positive, we just see sellers come in. And the reason sellers come in is because the share price just keeps on dropping. I think there's value here. I think there's great value because the P ratio of this company not long ago was like 50. Now it's below 20. Wouldn't be surprised. Yes, 19.97 according to TradingView. This company is still growing. It's growing at a nice clip. Maybe the market is concerned about competitors. Maybe the market is concerned about it only being a one product company, but it was only a one product company that long ago. The only thing I can think of, share price has been in a downtrend for a while, and the market is just negative sentiment. And we have seen on occasion the share price goes on a rally and then the selling comes in. We saw that on the 5th and 6th, 5th and 8th of July. On the 5th of July, share price rose 14%. Then the next day, the selling came in. Share price dropped 6%. No, share price dropped 10%. And we've seen other rallies where it just peters out because sellers come in. So this is, I am not going to sell my Clinuvel shares because I just think there's value here. And as soon as I see the share price turn into an uptrend, as soon as I see the sentiment, negative sentiment turn more positive, I'm going to add to my position because valuation. Clarity seems to be forming a base around the 650 level, but I think could still go either way. Okay, 650, yes. So funny enough, with Clarity, 650 was my key level. I think it was 650. Yep, right on 650. I got this blue line. 650 is my key level. And we can see the share price just fall off, maybe not off a cliff, but definitely fell. In fact, it fell like 10 days out of 11. And then as soon as it hit 650, it started to level off. But it could go both ways. It could start to rally again, which I think is more likely. But if it falls below 650, that would be a negative move. Share price relatively flat today at 666. Again, an unfortunate price. Yeah, so I actually agree with that. I think it could go either way. And that's the whole point of technical analysis. Understand it's hit an important level and it could go either way. So what you want to do is remain patient and play it. When it goes that way, you want it to go. So if the share price starts to rally, gets past 7, that's when you might take a trading position. Or if it falls below 650, just sell out and then buy back in when it gets back up above 650. I don't know. Many ways to do it. Landy Lee, thanks, Kneppy. How do you determine what a fair price is to purchase a company at? I've tinkered with reverse DCFs and use EV operating cash flow, but struggled to find a holistic valuation of a company. Also, how is your investing Excel document set up? Okay. How to determine what a fair price is to purchase a company at? What I tend to do with fair prices is I look at the historical, any sort of valuation metric. So EV to operating cash flow, PE, could use that. But I do like EV to operating cash flow or EV to free cash flow. So what I do is I typically look at the historical ranges this company will trade at. So if I see, because you can't have a number for all companies. You can't say, well, if a company has an EV to operating cash flow of 10, it's cheap. If it has a 15, it's expensive because every company is completely different from each other. Some people would say, oh, NVIDIA is so expensive at a P ratio of 50, but it's growing at a significant rate. Woolworths, no, the banks like CBA has a P ratio of 25, which is higher. I'm pretty sure the P ratio of CBA is higher than like Alphabet, which is absolutely ridiculous when you compare the growth of both companies. So you have to treat every single company different. So what I tend to do is have a look at the historical valuation metrics of the company and then just go from there. Also, do have a look at reverse DCFs. Don't spend a lot of time on that, but if I have a look at a reverse DCF and I say, well, can this company grow at this rate? Then I think, it could be good value. I don't usually look at or have a margin of safety. So fair price is fair price. You could do a fair price. You could ask the fair price of a company to 100 different investors, and you could get a massive range of numbers. And that's why I just find it really hard that people just follow brokers. Oh, we have a $10.50 price target for this company. But there's, I just, yeah. I don't mind as much if you use a lot of brokers and come up with a combined price target. I think that's okay using many different brokers, but how many brokers are there following some companies? There might be one or two. Sometimes there's zero. So that's how I do. I just look at the historical valuation metrics of a company. For instance, let's do it right now. Let's do CBA. Now let's do Google Alphabet. So P ratio of Alphabet. Now you could use many. I'm going to use P ratio because it's just simple. In fact, P ratio is not my favorite. I do prefer even EV to EBITDA, EV to my favorite is EV to free cash flow. That is my favorite. But a lot of times you don't see it, like for instance, in what's this called? FinChat. You don't see it here. You have EV to EBITDA, price of free cash flow, EV to gross profit, PE, PEG, EV to sales, EV to EBITDA, price to free cash flow. I do prefer EV to free cash flow for various reasons. Also look at free cash flow yield, which is similar to EV to free cash flow, but not quite, because EV is in the EV to free cash flow, but price is in the what do you call it? The free cash flow yield. Anyway, so P ratio of Alphabet is 23.7. And I'm pretty sure that is lower than CBA. So if I had a choice right now, Alphabet, CBA. What? There's no choice for me. There's zero choice. Which company is going to be bigger in 5 years? I think there's almost no doubt which company is going to be bigger. It's like 100% certainty Alphabet will be bigger. 23 is not that expensive at all for this type of company that has significant growth potential. Anyway, so let's have a look at the PE ratio history of this company. You can do this for all these valuation metrics. And what you do is you go to financials. There should be a ratio section here, ratios. And it's just taking a little bit of time to load up. Don't know why. Maybe a lot of people are using it right now. Just have a look at P ratio. And this is the historical P ratio of Alphabet. So the lows for Alphabet were back in late 2022 at 16. You could have bought you could have bought this company at a P ratio of 16 back then. So historically, the P ratio right now for Alphabet is quite low. I'm going to have a look at another one, Apple, because this is a classic case. Apple, a few years ago, had a P ratio of, I think it was like 12. And that's when Warren Buffett bought some shares. I just wish I was a little bit more savvy back then. So, yeah. So in 2016, P ratio of 10, not 12, 10. So this company was thought of not as what it is now. It was thought of a hardware company or something ridiculous. So the market put a low valuation to the company. So P ratio of 10. Recently, this company had a P ratio, well, right now it has a P ratio of 35. So what's happened over the last 8 years is this company had a discount, P ratio of 10. And over the last 8 years, this company has grown significantly, their sales, their profit, but also the company's has gone through a multiple expansion period where the market is willing to pay more of a premium for this company. So that's why the valuation of this company has exploded during that time, because financial expansion, multiple expansion. I think there's less likely moving forward that we will see multiple expansion for this company, but I don't think the PE ratio will go much higher than 35. It briefly did in 2020, but I don't think it's going to go much higher from 35. But 10, 10. Could have bought Apple at a PE ratio of 10 8 years ago. That's when Warren Buffett bought. Smart man. Hopefully I've asked, how is your investing Excel document set up? Oh, it's very easy. This is not a hard one. So I started this 2013. Yep, 2013. All I have is all the ticker codes, all companies that release pennies, 4Cs and 5Bs, and then just go down the list and just put in numbers. Simple as that, just cash receipts, that's it. So back in 2013, I was focused on cash receipts and revenue growth. So I thought, instead of looking at cash receipts and operating cash flow or free cash flow, just look at cash receipts, because what I'm looking for, the first thing I look for is cash receipts and revenue growth. Unfortunately, I have deleted many companies that have stopped issuing their Appendix 4C. I'm not doing that anymore. I'm not deleting any more companies because I had some classic ones here in the past. I had like MoneyNet, MyNet Phone, had some classic one, like a company called Biggin, which went bankrupt. They showed significant growth in receipts. The company went from a markup of like 10 million to 500 million. Yeah, it was about a 50 bagger. And it was my most successful company. I didn't understand how they did it, but just based off cash receipts, I bought some shares in the company. That wasn't a mistake, but that was not a reason. So I wish I still had that. But if you go all the way to the start, for some reason, the first company in this list is VTI. Then we have Self Wealth, Spectre. So you can see Self Wealth are not issuing their Appendix 4C anymore. A company called ICQ, iCar, not issuing their Appendix 4Cs anymore because they're not listed. They were bought out. Yeah. So some companies here, I just can't tell you what they are. CTV, what was that? CTV. Anyway, hopefully that's all. That's all. It's very simple. That particular, although I also have, this is the one I show you all the time, but I also have other ones here. Other, what do you call them? Tabs. Things I've worked on over the past probably 6 years, 5 years. Many things I work on, like the banks. So I did some stuff on the banks, I don't know when, and CBA had a PE ratio of 18.4, and probably I probably thought at that point, wow, that's expensive. PE ratio of CBA now is like 24, 20. In fact, I think it's 25. REITs, I did some work on REITs a few years ago, looking at share price, net assets, FFO share, NTA, FFO multiple, price to NTA, distribution yields, and well, and then for some reason I just stopped doing it because I realized gold, did some work on gold, 10% revenue. I'm not sure what this one is. Anyway, so that's it. So I primarily use it for Appendix 4Cs and 5Bs. So thank you for that question. And that's it. That's it. Oh, that's all I got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. If you have any, or otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.